Still missing a couple of panelists. I can't see them. But perhaps we can kick off. The topic essentially is ship financing from the owner's point of view. But before we focus on that, let's also address some questions that we may have on the offshore side and the two speeches we had just before tea.
A question from a man very experienced in the offshore sector, Bill Paul from ODS Petrodata. Oh dear.
Yes, Bill Paul from ODS Petrodata. My question's for either George or Andreas, or both if you'd like to answer it. Given that there's a huge overhang of new builds, and there's great difficulty in obtaining funding, why do you think there have been so few cancellations of new builds?
Well, I think actually there have been a number of cancellations, but they've been absorbed by the shipyards. Shipyards are like Macbeth wading across a river of blood, and once you're halfway across, you may as well keep walking. And so we've seen a lot of yards taking vessels that they built for other people back on their balance sheets and owning them in their own right. I mean, Otto Marine being a case in point with the Mossveld anchor handlers that were cancelled by the owners and then taken back by the yard.
Yeah, definitely I agree on that point. And also we have seen vessels that we thought would never reach the market and never get employment, sub-quality vessels, still mysteriously ending up with nice charters in various jurisdictions, simply because that investor behind it is very close to oil majors in that country, etc. So it's not really an open market in that respect. There are very shady areas in why some of the vessels actually are delivered and are getting charters. These are, of course, smaller type of vessels, not the big dragons of going into Brazil, etc. But smaller vessels we should have seen, to finalize, we should have seen more cancellations, we should have seen more blood on the streets, but you're right, there hasn't, and one of the reasons, of course, yards are sitting with them themselves.
John.
Given the expected technology changes in the shipping industry and also the significant shipyard overcapacity, should we be using, instead of 25 years plus, less than 20 to depreciate shipping assets? Should we start factoring in a shorter life?
Well, I think well-built vessels have very long lives. We've got a number of vessels in our fleet that are now 30 years old, and they're in very good condition. We are in the process of selling them, but the new owners can be assured that, that they're good quality assets. I think shipping assets can work to 25 years, and good quality, well-built vessels have a lifespan of at least 25 years. And yes, their work scope, what's happened is the work scope has changed over time. Those vessels that we built in the early 80s as AHTS are now more and more employed in standby roles or straight barge tows and less demanding work scopes, but they're still very functional vessels.
I think that's not the question for bankers, so I'll give the word to Yumi.
I think for this dry bulk, depend on what type of ship, depend on individual company. Their company sort of depreciate over 25 years, and yet we have very big residue value. So this, and that make a lot of difference in your depreciation cost, and then finally reflected on your profit and loss. But their company more conservative. They probably depreciate over this 20-year straight line, and then with probably this zero residue value. So it is, accounting sometimes can be very creative. I think there's people do think of the way to sort of this, let the balance sheet or this let the yearly operating profit looks better and all this a lot of things. So it depends on individual company policy. And this smaller ship, probably you don't have this problem of this bigger ship like Cape certain this port, they do have this age restriction. So you might not want to depreciate over 25 years, and this because of the age restriction. Smaller ship calling at probably less developed places, and then you probably can afford to sort of operate even up to 30 years old if you have a good management. So it all depends. But for Yumin, I think we depreciate over this 19 year, and the last year is a residual value. So this is individual company policy, I presume.
I had a question which is sort of bank related for Andreas. You mentioned the Caspian and quite a lot of activity, lots of oil, etc. At the same time, the various complications, the logistics, as you have huge units which you have to get through canals and the rest, and probably put them in place or put them together in the Caspian, such like rigs. From a banking point of view, you have the problem of should something go wrong, how do you get them out? How do you address that?
It's a very good question, and we have done units in the Caspian. It's not easy, and your board members don't like it at first, but if you pick the right assets, right size, it's still possible to get them out of the Caspian. There are canalways going in and out. You have certain restrictions on height, beam, depth, etc. So for offshore support vessels, yes, there are opportunities to go in and out there. It's not simple. It's not just going in and out, because you have to, height restriction is the biggest problem. You have to cut off the funnel and radars, antennas, etc. But there is a possibility to do it. Now, bigger units, when it comes to drilling or floating production, those units are now built in the Caspian, more or less. You can't get them in and out. So it's manufactured there. It's continuous life is staying there. And from a banking point of view, you have to take a cash flow view on that rather than an asset point of view. That's the way to look at it.
Yeah, and I guess with the oil that there is there, you hope that if something goes wrong with one of your clients, somebody will pick it up.
Well, Caspian so far, I mean, if I remember correctly, proven reserves so far in Caspian fairly, it exceeds what has been found in North Sea, sure, on gas in particular. So it's a huge market, it's a coming market, and it's going to be there for quite some time.
I'm not sure what exactly is happening, whether there's a fire drill or a fire, but... Oh, well, a disclaimer here, I don't, if anybody of you gets burnt, it is not my responsibility. Okay, any other questions, especially on the offshore?
Thank you. It's Malcolm Keys, Bahamas Maritime Authority. I noticed the two speeches earlier on from the banking side, unless I was mistaken, you made the quotation that it's no good offering a service only in one region with a few vessels, and yet the vessel operator was saying that the exact opposite, that you have to offer a service throughout the world. You can't just offer it in one region. And I just wonder if that's a difficulty some ship owners have with raising finance, that the banker's idea of lending money is a lot different from the actual ship owners. And another, just a general comment really on the gentleman from Swires. You mentioned that you only trusted tried and trusted operators. Well, you've all heard today about the Deepwater Horizon. We know what happened there. You look at BP, everyone thought BP was one of the top operators in the world, and Transocean as well. Tried and trusted, but still had disasters. So tried and trusted is not always the best way.
Just to clarify, I mean, what I said, I didn't really hear you there on your question, but what I said is that we would like to see, don't put all eggs in one basket. And George, I believe, is of the same opinion. You shouldn't just go for one market. The reasons being, shall we run or shall we sit? Sit.
Yeah, yes. For the time being, it appears to be false. When you see the fire and the smoke, then start panicking.
It's not cold in here anymore either.
Well, maybe that's the reason.
Okay, back to the question. I mean, yes, we as a bank would see our clients, prefer to see our clients having not maybe foot stand in every market, but at least having 2 or 3 main holds of different markets you're active in, simply because these markets interact differently when it comes to rates and earnings from each other. It's not like normal shipping. VL earns so and so much on a global basis. Cape earns so and so much on a global basis. Middle Eastern markets completely different earnings basis and different earnings potential than North Sea, Brazil, etc., etc. So it's more a bit like hedging.
Well, I guess George said 2 things. One is perhaps agreeing with you. On the other hand, he stressed the costs involved of operating in different markets. I mean, you have to, which perhaps also argues what he said, that it's only the few big companies that are likely to be the dominant players from here on, because you can't operate, if you're in Brazil, you need a big operation, costs, etc. So that argues against having too many.
I think what we're seeing is the emergence of strong local national players in the markets and the emergence of the international companies who operate on a global basis. And if you look at countries like Malaysia, you've got very strong Malaysian companies like Jasa Marine, like Alam, like Petropradana. In Indonesia, Wintimar are very dominant in the Indonesian market, but haven't really ventured outside Indonesia. And similarly, a lot of the Brazilian operators only operate in Brazil. So you've got these national champions, and then you have the global operators, the Tidewaters, the Bourbons, the Swires, the Maersks, who operate in many markets. I think one of the changes has been that the mid-tier, middle-sized operators who only operated regionally have largely been consolidated out.
Yeah, I mean, don't get me wrong, a small operator who is starting up shouldn't say, I want, as you said, 1 vessel in that market, 1 in that, 1 in that, 1 in that. It's impossible to fulfill your obligations in respect to charterers. What I'm saying, however, is if you're a fairly big operator and you're only focusing on 1 market, maybe you should diversify your risk and go into 1 more market.